In a world driven by speculation, noise, and hype, one man changed the way we think about money forever. He wasn't a hedge fund manager, nor a tech CEO, but a teacher, philosopher, and investor. His name? Benjamin Graham, the father of value investing.
Before Warren Buffett, before Charlie Munger, before all of those guys, there was Benjamin Graham. His ideas shaped not just portfolios, but financial philosophies. In today's video, we are going to dive into the legacy of the man who taught the world how to think about investing, not just how to buy stocks. From surviving the Great Depression to mentoring Buffett himself, Graham's life is a masterclass in resilience, logic, and discipline.
Born in London in 1894 and raised in New York, Graham's family lost everything in the panic of 1907. Despite hardship, he earned a scholarship to Columbia University and graduated second in his class at just 20 years old. He began his career on Wall Street at Neuberger, Henderson, and Loeb. He quickly rose through the ranks, earning a reputation for brilliance. But it wasn't intelligence alone that defined him. It was his ability to find value when others saw ruin. In 1929, the world changed. The market collapsed. Fortunes evaporated overnight. But Graham didn't panic. He analyzed. He searched for companies whose stock prices were trading far below their intrinsic value. This led to his famous net strategy, buying companies for less than the cash they held after all liabilities were paid. It wasn't flashy, but it was rational, safe, and profitable. In 1949, Graham wrote The Intelligent Investor, the investing Bible still in print today. In it, he introduced timeless principles: margin of safety, intrinsic value, the allegory of Mr. Market. Mr. Market shows up every day offering you a price. Sometimes he's euphoric, sometimes depressed. Your job is not to follow his emotions, but to exploit them. At Columbia, Graham taught a shy student from Omaha named Warren Buffett. Buffett called The Intelligent Investor by far the best book on investing ever written. Graham also ran the Graham-Newman Partnership, one of the earliest hedge fund-style entities. It wasn't about beating the market. It was about protecting capital. Graham's influence spans generations. His philosophy became the foundation of conservative long-term investing. He believed the essence of investment management is the management of risks, not the management of returns. For Graham, the market was a voting machine in the short term, but a weighing machine in the long term. He advocated for rationality, humility, and discipline, virtues often missing from today's markets. In a world of speculation, Graham gave us reason. In a market of emotion, he gave us logic. His legacy lives on, not just in books and lectures, but in the portfolios of those who invest with wisdom. Start your value investing journey today. Subscribe for more timeless investing wisdom. Be rational, be patient, be Graham-like.